Hey guys, Nikki, welcome back. It's good to have you back in the studio.
I know, I've missed you guys.
Missed you too. All right. Hey, look, guys, we have a packed show today. Ton to talk about. Let's just jump right into it. So we are officially in the they fight you crypto phase. You know, the old saying from Gandhi is first they ignore you, then they laugh at you, then they fight you, then you win. So how the hell is that relevant to crypto?
You tell us.
All right. Well, here we go. So, you know, whenever I first got into crypto, like in the early 2013, it wasn't on any government's radar. It was like, oh, what is this little scammy thing that's just going to be a pump and dump and go away, right? That was the attitude. And then all my Wall Street buddies started basically laughing at, well, Chris, why are you trading Bitcoin? Why are you investing in this? Like, what is this thing?
It's a scam.
Yeah. And then governments are like, oh, wait, you know what? This is not only is it here to stay, but like this is actually a really big threat to the existing financial system. So yeah, right now, you know, governments are like really, I think, starting to freak out and realize that, hey, like this is a big competitor to the way that the financial system has worked for the past, 100 years or so. Mm-hmm. So that's where we are today, guys. And, let's just talk about what that means. So I actually tweeted this a few days ago because recently, the Chinese government came out and they started distributing some of their scam cryptocurrency to their citizens. And basically, what I said here is like, look, government token airdrops are no better than any of these like prior Ponzi schemes, like OneCoin, BitConnect, stuff like that. It's a fake made up ledger. It's not distributed. There's no proof of work. It's literally a small group of people sitting around in a room going, okay, let's create these digital tokens. Venezuela tried it. It flopped. Now the US is on their way to try something like this. So the former CFTC head is basically piloting a digital dollar, and I read through this entire thing, but basically they put out this proposed pilot programs giving use cases to how the digital dollar can help. And I couldn't help but realize that all of these use cases, except for maybe one, is completely handled by Bitcoin in a much better way.
Well, what's the benefit of using this over Bitcoin?
The benefit for governments is control, right? So there is no like distributed ledger that is, that is fair, right? It's still controlled by the US government. And basically they just want more control, right? So if you step out of line or if you do something they don't like, guess what? They freeze your digital wallets. It is not borderless, permissionless money. In fact, they're terrified of that. Recently, the Department of Justice came out with this report on the Cyber Digital Task Force, and they basically went through like some of the benefits of cryptocurrency, but also a lot of the scams and serious crimes that are committed. So we live in a society where I think it's good that we have rules and regulations and like enforcement of some things because we don't want anarchy and just chaos, right? Mm-hmm. But one thing that is very, very clear here is they are terrified of privacy coins. And this guy, Jerry from Coin Center, I believe, he actually did a really nice tweet storm kind of pointing out some of the big points here. One of the biggest things he said in the beginning of this was, on this vision, humans will reclaim the internet, their data, and their anonymity from large outside forces, whether they be corporate firms or government entities. So they know that people want to take control over their money, but they're also really aware of like this DeFi movement, and they made some comments about the ICO boom a few years ago. And so, look, I read through this entire thing as well, but the point here is that it's very clear that governments are now scrambling to not just get control over like the illegitimate criminals. Basically, they're obviously trying to stop the crimes, all right? The serious crimes that are not good for humanity, like child porn and stuff like that, which is obviously, we got to eradicate that shit. Mm-hmm. But whenever we start to see governments come out and say they're going to launch their own digital currencies, I don't really like where this is headed. And I think what we're going to see in the future And actually, if we look at this article from CoinDesk that came out today, your wallet in 2030 will be full of free money. So this article is basically talking about how if we get universal basic income, one of the use cases for these central bank digital currencies is they can do airdrops. They can do universal basic income directly to your wallet if you play by the rules, if you do what they want you to, right? So again, it's all about control.
Yeah. I mean, that makes sense, but they can airdrop into your bank accounts now, but it's definitely, as we know from the stimulus check, it's a little bit more complicated, right? I guess the government could give everybody a digital wallet that the IRS or whatever, they just directly use that.
Mm-hmm. I guess it removes some of the issues that we saw. Like, what were some of the problems we saw with the recent stimulus checks?
Well, unfortunately, people's addresses were incorrect to get the checks mailed. People's bank accounts may have changed, and the IRS isn't going to reach out to you and be like, hey, Chris, can I get your updated mailing address and bank account? They're not going to do that. They're going to go off of whatever they used for your last tax refund or when you paid your taxes. So people were not getting their checks, and it caused a big problem.
Yeah. So I guess like logistically, maybe this can fix some of those issues. But again, they don't really care about that. The government doesn't care about inefficiencies. They care about control.
Yes, exactly. Well, yeah.
Yeah. I don't know. What do you think, Trav?
I mean, I think this was sort of telegraphed last year, too, when the Fed was producing white papers and having meetings about what it would look like to have a digital dollar as well, because one, like you said, like they don't want to relinquish control over the money supply to some other external currency.
Yeah.
Like they would do the same if it was another country's currency that started gaining more share in the economy. So yeah, they want to be able to, and frankly, I think that some level of control by the government probably is a positive. Maybe I should take that back. That's a blanket statement. That's probably not true across all governments, but to have the ability to do stimulus, to do fiscal spending, we can argue about whether that's a good thing or not long term, but the ability to do that in a deep recession, for instance, it clearly does help the economy to recover. And so I can see why the government would want to retain that ability. If you have something like Bitcoin that took off broadly over a decade or two, and it became the de facto standardized currency in the US, for instance, then the government would lose the ability to expand the money supply or do fiscal spending and things like that. So I can understand why why they would want to have that kind of control. And like you said, why they would want to be able to control things like, black markets, child pornography, things that, trafficking in the dark web where, people are putting bounties on people's heads. Like that kind of stuff is the kind of thing that you do as a society want to try to eradicate. So those are all legitimate use cases to me, but there are the other use cases too that come with that. When you have a government that can have control over the money supply, then you have the ability to freeze accounts. And we've seen with like private companies like PayPal, when they just unilaterally freeze an account because maybe it's a legitimate business. I've seen people with legitimate businesses get their accounts frozen for months at a time.
Oh, yeah. Mm-hmm.
Hurts their ability to do business because of whatever arbitrary rules PayPal decided. And that's the kind of power that you could have with government as well, controlling things digitally 100%. And so, yeah, there's some concerns there.
Yeah. And look, the U.S. isn't the world, right? Like there's obviously other countries that are trying to compete with this too. And we've seen some regimes be more repressive than others, right? Like in China, they obviously want total control over the currency supply. And they've shown that with, capital controls, and people have used Bitcoin to actually get money out of China.
Yeah.
And so I don't know how this ends up. I just think that the borderless, permissionless money wins long term. In between now and then, it's going to be a rocky road, and we are like entering the fight you phase of the crypto cycle. So
is the goal to eliminate cash transactions?
Absolutely.
Like altogether, eventually no cash.
Yeah. Okay. It's no secret. I mean, governments like to look at crypto and say, oh, that's money for criminals, where really US dollars, like physical cash, are used for more crimes in order of magnitude higher than cryptocurrency, right? And we've seen banks that have gotten fines of billions of dollars for money laundering drug cartel money in what currency? US dollars.
Mm-hmm.
Well, also, not to mention, a lot of people evade taxes by getting paid under the table with cash.
Yep.
So another way to control that, I guess, would be this solution.
Yeah, absolutely. And, I think it would be pretty easy for the U.S. to turn on this digital currency. I mean, we're already seeing with stablecoins how easy that works. Now, it's not a risk-free situation. Like a lot of people point at Tether, which recently just printed an additional 50% in their supply, which is supposed to be backed by US dollars. You can make an argument for Tether that it's not exactly US dollars. You've got USDC from Coinbase that, they claim to have audited statements. So, this whole we're going to have, I guess, 4 different types of currencies. You're going to have true decentralized cryptocurrencies like Bitcoin. You're going to have government or central bank currencies. You're going to have like stable coins, which aren't really controlled by a government, but are supposed to be backed by fiat currency. And then you're going to have corporate coins like Libra and stuff like that. So we're just going into a true like global battle for what is real money.
Fascinating stuff.
I do think some of these will coexist for a long, long time. Like, I don't think the emergence of central bank digital currencies will necessarily hurt Bitcoin or hurt, some of the more dominant distributed, decentralized currencies that are emerging. Unless like some governments decide to take a really, really hard line at a certain point where they're like in this fighting phase, they're like, you know what? On-ramps to Bitcoin, done. Coinbase, done. Kraken, done. You can't do business in our country. I'd be surprised to see it, but it's possible that if certain set of conditions happen, that could be the case.
Yeah.
I can't help but wonder, like with the central bank digital currency, I imagine if you send it to the wrong person, there's a way to get your money back or to charge it back or whatever, I would guess. Or are they going for it to work exactly like Bitcoin where, hey, if you send it to the wrong address, you're shit out of luck.
No,
like you lost
I
it.
highly doubt they're going to have that immutable property to the money. Because again, that relinquishes control. At some level, there is like maybe some kind of nice form of having clawbacks and things like that, but that kind of kills the one of the major benefits of Bitcoin.
I know, and that is also possibly one of the reasons why some people feel like they can't use it because of that fear of sending it to the wrong person or whatever, and wrong wallet, it's gone.
Yeah.
Is that a concern amongst the crypto? I mean, maybe not
Absolutely.
with really experienced crypto users.
Well, no, even really experienced, like you have to make sure you send it to the right wallet.
Yeah, you're like checking the address like 50 times,
Yeah.
And a lot of, people that are newer to crypto, that's probably a fear that they have with everyday use.
That's a great point. Imagine like, Norma Jean, who's 80 years old in rural like Midwest.
Yeah. And like she gets scammed by someone and they're like, hey, I'll help you with your Medicare, transactions or something like that. And then she ends up sending Bitcoin and she can't get it back. I don't know. Just those little things.
Can I make a prediction here?
Yeah,
Yes.
go ahead. Do it.
Let's do it.
Let's hear it.
I don't have enough faith in the ability for governments like the US government, at least, to actually execute on the vision to create a really well-functioning digital currency.
Yeah.
I just don't like. Are they going to hire a team of 200 developers that know what they're doing, that are well paid, that can actually execute and create a well-functioning chain and a well-functioning currency? There's so many things that have to be done right for that to happen. And also, I'm really skeptical unless we see. I think what would happen first is Bitcoin and other cryptocurrencies from the private sector have to get so much more use and so much more value increases for them to finally take the steps to actually go and develop their own chain and start putting it into practice, because there's so many barriers to actually making this happen. Yeah, they can write white papers all they want, but I'd be really surprised to see them actually execute.
Yeah.
I mean, look at the healthcare website that they created, 7-8 years ago when the Affordable Care Act came out. They couldn't even get a website built to handle 100 million user traffic.
Totally true, man. I mean, they're going to try, right? And I think they're going to ultimately fail.
Yeah.
That's my prediction, is like they're going to lose to Bitcoin. Yeah. Like that, I think the end game is clear. I don't know if it's a year from now, a decade from now, or more, but like, if you just think of like the true properties of money, the more government puts these bullshit layers in just for control, the people are going to choose the better form of money, which is Bitcoin.
I will say China is kind of a different story because China has a lot more ability to actually implement, things, policies through their centralized government and actually force their citizens to utilize things.
Yeah, I mean, so what's China going to do? Like live in this moat with their own intranet and block out the rest of the world, their own central currency, block out the rest of the world, or I guess if they ultimately like become the world power and then with the heavy hand, they force the world into submission. I don't want to live in that world, and I don't think that's going to actually happen, though.
Yeah.
But I mean, if China wants to live in their own little bubble and be repressive, but we've already seen it already. Like billionaires and really wealthy people are funneling money out of China as much as they can, through the Vancouver real estate market, Bitcoin, like anything they can do to get their capital out of China. The smart people are doing that.
Yeah, you're right. People are resourceful. People have figured out ways to get around the censors, the social media censors there in China. They'll figure out ways to get money out of the country in various ways. It's a game of whack-a-mole, I'm sure, but it's like you said, I think it's hard, especially if you have something that's truly global, decentralized like Bitcoin. I think it's just a really hard thing to kill. It becomes very resilient.
Yeah. And I mean, look, we're seeing across the board, not just on the price chart, but also with on-chain metrics and just fundamentals and user growth numbers, like people are waking up to this now at a faster rate than they ever have. I'm more excited. Like I like to reminisce about the good old days in crypto back in the early days before all the bullshit scammers came in. I'm more excited now than I ever have been, though, because I see the momentum starting to build.
Everything that you spent all those years telling people about crypto and Bitcoin in particular, and it kind of felt at that moment that nobody was listening to you.
Yeah.
And you probably felt a little crazy at times, and now you're actually seeing like, hey, I wasn't so crazy after all. It's actually all playing out.
Yeah, well, I'm still crazy, but
yeah,
I mean,
you are, but
in 2015, absolutely. I mean, in 2015, I'm like, look, all right, I'm throwing a major percentage of my net worth into this. I'm either going to have to work hard to dig myself out of this hole, or it's going to pay off massive. But that's what investing is, I guess. You have conviction, and you have to be right.
Well, be careful on like throwing a huge percent of your net worth into something that you're not super sure of. The financial planner in me's coming out here.
Yeah. Sometimes you got to take a risk if you find something that you think
measured
can change
risk.
Yeah.
Yes.
Yeah. I mean, I didn't go 100% in, but I was like, if this goes to zero, this is going to sting really bad. But
yeah. It's also very different depending on your station in life and all those types of
risk
details that we talk about. But yeah, there are times to make big bets and then when you have the conviction and you make a smart bet and it pays off, like that can be life-changing.
Absolutely, man. Yeah, I mean, just taking a look, let's do some TA and look at some charts and talk about some recent trades and some trade alerts. And, Bitcoin right now has been basically consolidating above 10K for the longest period of time that it ever has. And, this is like the third or fourth. So back in 2017, we crossed above and quickly got below. 2019, we had a little attempt and it retreated back. And then now, if we just look at the TA, you can see that we've now turned 10K from prior resistance, where it was basically resistance for over a year, into support. And we've actually been holding some higher lows into this zone. And so, Textbook, yeah. Anything could happen, right? So there's always a bull case and a bear case. The bull case here and what the TA is showing us is that price action is very strong right now. Mm-hmm. Obviously, one thing could happen to completely throw off this, right? Like price charts are not predictive in nature. They just kind of show you like the path of least resistance in a way, right? But again, everything is probabilities based, but that's why I'm long. That's why we went in heavy in March and have been adding along the way on dips. And also, we've seen altcoins come along with us on this little pop here. Ethereum. So looking at Ethereum, I actually recently got into a new trade here. Let's see, what day was this? 10/8. So a few days ago, I guess last week, I started to buy as we were retesting prior resistance at 350 turn support. So basically what I said in our community was, look, I'm buying some ETH here. I'm scaling in. So once a trend starts to develop, I don't just go all in right away. Like I'll build into a size. So I'll scale in like a quarter here, or eventually build into half and then full size. Mm-hmm. And so the idea here, and the reason why I started buying ETH again, which really, this is the first time that I bought ETH since last year, I had a breakout trade here above 200, and it wasn't a huge trade. It was like into the 300s. And then quickly reversed.
Only 50% in a couple months.
Yeah, guys, listen. I know in the stock market those are big numbers, but in crypto that's peanuts.
You crypto guys are spoiled.
Yeah, man.
Your triple, quadruple digit returns
Absolutely.
in a day or two.
Well, I don't know. You've had some pretty massive trades in stock season.
Yeah, those took a while. Well, the big ones take a while.
Yeah. Well, so anyway, like if we look at ETH though, I've actually been pretty bearish on ETH over the past couple of years because it had so many bag holders and like just saltiness from the ICO bubble. And, you know, when it went from basically like nothing to up to like 13 or 1400, it got way overextended. There were a lot of ICO projects that were bag holders, and that's why it stayed depressed for so long. But you can see, I mean, we recently broke out of basically more than a year of this accumulation range.
Yeah, that's beautiful.
Yeah, and this is what I really like to look for trends to start to develop is like you get the first breakout, then you get the retest, and there's no guarantee that this is going to go into a full like next
Trend.
bull season. Yeah, you never know. Sometimes they get cut short, sometimes they go much further than you expect. But the first sign of this waking up is that initial breakout of the prior accumulation range. And the fact that if we zoom in now, we've had a few higher lows into this zone, you know, to me, again, along with Bitcoin, that's pretty bullish. Now, a lot of altcoins right now are just tracking Bitcoin. So if Bitcoin takes a dump, I expect most of these altcoins to get hit pretty hard too. But overall, I mean, things are just
generally how it works. They move together.
So it depends. Like when in the early days of ETH, there was actually like an inverse relationship. So it was like Bitcoin would go up, ETH would sell off. And then when Bitcoin would pull back, you'd see a pop in ETH. So it was almost inverse. And then it switched and it became, they started to move in correlation
together
with each other. And then it was like kind of random for a while. So we go through these different phases, but in general, like just kind of the theme over the past year is that there's been a lot of correlation between these, and there's metrics we could pull up to show this, but
that's every asset class lately.
Right now,
like, I mean, everything's going up together.
Yeah. Why has it all been so correlated? Is it the fear in the market that's driving that?
Yeah, I think that's a big part of it. You know, we had, especially when you have a big market dump where like a lot of different asset classes dump at once because of a crisis like we had in the springtime, then not only the initial dump, but also the recovery of a lot of assets happens together.
Yeah.
And then once that matures a little bit, then you start to see asset classes start to perform a little bit differently and start to kind of go their own direction. But
Energy's been the only like outlier that's just been going down.
The lagger. Yeah. It's like everything in
oil.
March
Sorry.
panicked together, and then like certain things have recovered faster than others, right? I think probably the biggest thing in the stock market is obviously tech, right? And we've talked a lot about that. The NASDAQ, again, as of today, is testing all-time highs. I mean, just absolutely insane.
Yeah, the market is showing no mercy to the shorts right now. None.
Yeah, it seems like...
And I guarantee you, shorts were piling into that pullback, thinking this was going to be the big kuna. And it just keeps squeezing it. Buy the effing dip. I mean, where's the hat?
By the way, yeah, what did you get there, Trav?
Yeah.
I got the BTFD, buy the freaking dip. Or, you know, the F might be a little bit different for you. But
You choose your F.
buy the freaking dip hat. Pretty nice.
Nice. I love it.
You know? But yeah, that's basically been a lot of people's strategy, I think, this year. That's worked well. I'm a little bit more cautious on things, but
yeah,
tech it's like a steam engine, just keeps rolling.
It's hard to say what's going to bring this market down at this point. I mean, I would say the election, but even that, I'm starting to think, you know, maybe we'll get short-term volatility either way, and then it's just going to bounce back. I think, I mean, we're kind of getting off on a tangent here, but yes, it's been fascinating to see, and it sounds like it's just stimulus hopes right now.
Yeah. I mean, a lot of like hope, and I guess the theme is like, why try to guess where the top is going to be? You're either in, and like for anybody that's read Reminiscence of a Stock Operator, like the idea of don't try to guess when a trend is going to end, it's that wisdom has been around for 100 or more years, and it's true. It's like when you try to guess when a trend is going to top out, sure, you might get right or get lucky every now and then, but in general, if you just stick with trends and ride the momentum and stop letting your own bias and your own opinions about how the world should work, or, oh, the Fed is bad, therefore I'm going to stay out of stocks completely, right? Like, it's people that let their own bias seep into their investing strategy that they underperform, right? I don't know why. A little tangent
Sorry,
there.
that was my fault. That tangent was my fault.
Hey, no worries, man. That's what this show's about.
There's a lot of positive things that are driving even tech stocks. You've got quite a heated market in terms of M&A, IPOs. There's a lot of money chasing tech companies, and that helps the market. Absolutely. 100% it helps the market.
So talking about that, why don't we transition into looking at some of the thing, the whole SPAC thing has been a huge theme. Why don't you catch us up on where we're at with that, Trav?
Well, SPACs, the gold rush continues. We've seen quite a few SPACs trying to raise capital the last couple of weeks. You've got 3 new SPACs that are now trading, that raise money from Social Capital, which is Chamath's. He's now on IPOD, IPOE, and IPOF. If you remember, like IPOA, I believe, was the one that acquired Virgin Galactic, took it public. IPOB is acquiring Open Door and taking it public. IPOC is acquiring a health insurer and taking it public. So now he's got his next 3, IPOD, IPOE, and IPOF, hunting acquisitions. And so those are now trading.
Which, by the way, IPOB is like on a rip.
Yeah.
This was Open Door, the real estate company.
That's right.
Ooh, man. Yep. I personally, because of my my leftover, I guess, scars from the real estate bubble in the early 2000s, like, I just see so much risk in this. But, hey, I don't know. The chart is beautiful.
Yeah, it's a really competitive space now with Zillow and Redfin also competing heavily in the iBuying arena.
Yeah.
But, Open Door is kind of the OG, and they definitely have... they have a really good team and they have a really good long-term plan, and it's a huge market in terms of total volume. So we'll see what happens. But yeah, then you've got some new SPACs. Anyone is trying to raise a SPAC now. You've got the Moneyball guys raising a SPAC to go out and buy a sports team. And so they're in talks right now with the parent company of the Boston Red Sox and the Liverpool Football Club. So they may take the sports teams public, and then you have Shaq.
Well, okay, wait a minute.
Has that ever happened before? A sports team? Sorry.
Yeah, is this a first time? Or?
No, there are a couple of sports teams that are public.
In the U.S. or in Europe? Or?
Mostly in Europe. There may be 1 or 2 in the U.S. Like, you've got Madison Square Garden, which is, that's more of...
The property, right?
Yeah, They also own some other assets related to the sports team, and there's like Liberty that owns part of the Atlanta Braves, and so you've got some exposure there to some sports teams, but it's not huge. Most sports teams are still held privately by like billionaires.
So how would this work? So if this SPAC, they're talking about like buying the entire team?
Yeah, I imagine, given the size of the valuation, that
$8 billion?
A lot of the owners will still retain a stake, and so my guess is they won't acquire the whole thing because, like, here it's saying they plan to buy like a quarter stake in the group.
Oh, okay. So if it's only a part, then who's like running the team? Who's like the CEO or the... I guess not the manager on the sports side, but who's actually calling the shots?
So you've got the owner who is, and some sports teams have ownership groups, like the Golden State Warriors. A bunch of venture capitalists own the Golden State Warriors, and so it's like a group of them.
So is it kind of like a board that makes decisions in that case then?
In that case, yeah, exactly. And then in other cases, like, you've got teams that are almost wholly owned by like one billionaire. I believe the Patriots are like that with Bob Kraft, and then different teams, across the globe are owned by billionaire owners, and they make sole decisions from the ownership level. Jerry Jones, of course, a famous owner of the Dallas Cowboys. And then you have under him, you've got a manager that they put into place, but they can fire them if they want.
Yeah, that's how I thought most teams were kind of organized, was you have a billionaire that owns it, and then you have a manager that, actually manages the operations of the team.
Yep.
That's really interesting. Like, what if like more teams actually start going public and they're managed by a board, and then you can own equity in it? Like, seems like you can get more buy-in, and there's a lot of benefits from that maybe.
Yeah, I think it'd be cool. It does raise some questions about how decisions are made, and does it become like run by like mob rule, where like you're constantly churning through GMs and manager or team coaches every 2 years because the shareholders are mad, but
that could get ugly.
Yeah. So pluses and minuses there, I think, but it's super interesting. I would love to have more sports teams be publicly traded.
Yeah.
And then you've actually got some sports stars or former sports stars like Shaq. He's joining the SPAC party. He is raising money.
Shaq SPAC.
Shaquille O'Neal.
Love it.
He's actually a pretty big investor since he's left the NBA, and of course he is a commentator as well. But he has been very active with investing.
Doesn't he own like a ton of Five Guys?
Yeah, that sounds right. And he's also involved in Papa John's. I believe he may have even gotten a board seat there.
Interesting.
But yeah, there's some interesting investments he's involved with. And so now he's getting involved with some former Disney executives, and they're raising money for a SPAC to invest in, I believe, a media company. It's called Forest Road Acquisition, FRAC. And so that's another one. And then, you just, every other day, it seems like there's some new group of people that's trying to raise money via SPAC. At some point, I think there's going to be too much money and not enough deals or not enough good deals. And the SPAC market's going to have to cool off. Maybe we're getting closer to that.
To me, like looking at the stock market, and I'm going to play like beginner's mind here. The biggest risk that I see outside of all the Fed stuff and macro stuff, but we talked about this last week, how there's just so many levers to pull, and like to try to make predictions long-term about the global macro picture to me is just like, so difficult. Mm-hmm. The one thing that I kind of understand though is the idea of too much capital chasing bad deals. Mm-hmm. That's when markets collapse, right? We saw that in crypto. We've seen that in prior stock market bubbles. How do you guys feel, just like on the market sentiment side, in equities right now? Do you guys feel that frothiness and just too many people just chasing shit?
Yeah.
In certain areas, absolutely.
100%. Yeah.
Some areas, no. Some areas are being, I feel, underappreciated.
Yeah.
And then other areas are just like, how far is this going to go?
Yeah. So what are like some underappreciated areas?
I mean, I think that right now I have my eye on some of like the value names and some of the recovery stocks, maybe some retail names, specific retail names. And also I'm starting to think about financials more. And I think that there are pockets of value and growth. It's kind of an oxymoron, but I do think that there are certain areas in growth stocks where you can find, good solid companies that are growing double digits that aren't trading at crazy valuations, which we do a lot of in the community. We just kind of seek those types of stocks out. Chasing the hot names, the Zooms, what are some other high flyers? The Teslas.
My brother was just asking about Square today.
Yeah, I mean, we were buying Square a long time ago. Now, I wouldn't be buying it up here.
Yeah.
Yeah.
But this is where people are like, hey, it's like buy. People are buying high.
Yeah,
that's what they do.
Yeah,
and when I look at a lot of these names, I feel like the music is going to stop eventually. It's going to have to stop eventually. It always does.
Yeah,
it's just a matter of how deep will these corrections on some of these stocks be, or it may not happen until they come out with a bad earnings report. Mm-hmm. And then these are the types of names they're at more risk of really seeing big sell-offs in their stocks if they don't come up to snuff with their earnings and their growth numbers.
Yeah, if they don't meet expectations, I mean, things are going to start. And so I guess that's a good segue, talking about this week and next week being earnings season. Like, have we seen any results that are kind of a bellwether yet, or is that yet to come?
Just today, we've started the Q3 earnings reporting season with JP Morgan and a couple of the airlines like Delta Airlines. So airlines and banks this week are the main groups of companies reporting. Mm-hmm. Next week is when we start to get a lot more of the tech companies and just broader sector reporting. So this week is mostly, like I said, banks and airlines. And actually, it's kind of a tale of two different stories here so far. On Tuesday, JP Morgan beat expectations. They actually reduced some, they took back some of the credit losses that they were reserving for last quarter and the quarter before, because credit trends are recovering faster for them than they initially expected. And they put up a pretty nice profit number. And so they look pretty healthy. On the other side, you got Delta. They have reduced their cash burn rate to slightly less than $20 million a day, but still burning capital rapidly.
Yikes.
Still, at levels that are 50, 60% below last year's levels in terms of traffic. And so
I think we were looking at this yesterday, right? Like, what are the U.S. Travel numbers back to for airlines?
they're back to about 35 to 40% depending on the day.
Okay. And where do they need to be actually profitable?
For airlines, they need to be at about 65%, 70% load factor, what they call load factors, which is essentially the percentage of seats that are filled.
Yeah.
And, a lot of right now, if a plane is maxed out right now with the middle seat policies in a lot of airlines, you're actually, the best case scenario is 65% load factor.
Yeah.
Because they're leaving middle seats open. So,
Yeah.
2/3 of the seats being full is full. So they're hoping to get to like 65% by like end of the year, early next year, but they're planning as if they're not going to be back at break even for an entire year.
Interesting.
Still from here.
My concern with the airlines, and I'm still not jumping into any airlines, like,
Risky business models.
yeah, but my concern there is now we're starting to see cases spike again. And as much as I want to believe we won't see shutdowns again, I do think that we will see people more afraid to travel again. We've kind of come out of this. People have become a little less afraid to do that. And we are seeing the numbers tick up. I mean, I was just on a plane and it was full with the middle seats being available. So people are out. They're trying.
Yeah.
But if the cases do spike again, that's my concern with the airlines is people are going to retract.
Yeah. And I guess, another big thing on the COVID side is, was it Johnson & Johnson just paused their vaccine trial?
Yeah.
So there was some, mysterious illness that came out of that?
Yes. And there was it AstraZeneca paused theirs, but they, I think, resumed their trials. But now Johnson & Johnson, they, I guess, had this mysterious illness. And I'm starting to think more about, like, what does it look like? Everyone's has hopes of the virus kind of solving all of our problems. But
The vaccine.
Freudian slip there,
Wow, Freudian slip. The vaccine solving all of our problems. And I'm thinking to myself, okay, I need to start thinking about what does this look like if we don't get a vaccine anytime soon? What changes, if anything? Are we going to start to just kind of say, oh, well, this is our life now, life with Corona. Let's start to at least try to get back to normal. We don't have a vaccine, so what are we going to do? Are we going to shut down and are we going to not live our lives for the next few years?
I think it's very apparent now that the repercussions of a lockdown can be much worse than, I hate to say it this way, but like there's a lot of deaths that are happening outside of just virus infections, right? Suicide and people like depression and all of the, unemployment, all of the really bad shit that's happening outside of the virus, I think is, now we know what it's like with the death rate. Now we know what it's like with the lockdown risks.
Mm-hmm.
And I think maybe the pendulum has swung the other direction to say like, look, the lockdown is just not worth it. Like the world's going to come crumbling down if we go back into lockdown.
And another thing I'm considering is I just saw an article about a gentleman in Nevada that was reinfected, I guess within a couple months span, maybe it was 2 or 3 months or something like that.
Yeah.
And I guess antibodies aren't sticking around long. Okay, well, what does that look like? Is this just going to be the new normal if we can't have herd immunity and we're just going to continue to be infected over and over? And whether everyone's going to take the vaccine, I don't think everybody's going to take the vaccine.
Yeah.
I think maybe many people will, but not everybody. So what does all that mean? Like reinfections, not having a vaccine, we can't lock down.
Yeah.
So
there's no easy answer there. I don't know.
Yeah, there's a lot of, I will say there are some reasons to be optimistic about, it does seem clear from the data that we've gotten better at figuring out how to treat the disease and make it less lethal on average. That doesn't mean people don't still die, unfortunately, but it means less people that get it die. So that's helpful. And we have seen comments that they do still expect vaccines to be available by the end of the year. Again, we don't know how many people take them. We don't know how truly safe they are. But my guess is if you can chip away from different angles, you improve the ability to treat it. You have a little more herd immunity from people that have gotten it and recovered. You have, perhaps some people taking a vaccine by first quarter of next year. You chip away, chip away, chip away, and then eventually this thing starts to fade away. 6 months, 12 months from now, my optimism is that it becomes something that we look back on 12 months from now. We're like, dang, that was terrible. But
yeah,
we're kind of through the worst of it.
And I think if you have 90% buy-in of masks, I think that really crushes the R-naught. So, I know just anecdotally, it seems like there's less Karen videos on the internet from people freaking out saying, I'm not going to wear a mask, It's
just such a simple thing to do. And it's sort of like, even if you don't believe that it actually is all that effective, it's like, just be good to your fellow people around you, who believe that.
Well, you know what? I know that I feel more comfortable doing activities out in society if other people have masks on. So if anything, if we all have to wear masks just so we can all, go to a comedy show or go to, go get on a plane or whatever and go travel, then let's just do it so that people feel comfortable so that we can just get the economy rolling.
Yeah, and just get the numbers crushed and hopefully, we come out of this soon. Yeah.
But yeah, we're still getting on the fiscal stimulus side a lot of conflicting reports about whether it gets done, and I'm looking at it as if we don't get it done before the elections.
Don't tell the market that, before the elections,
The market seems to have kind of shaken it off anyway at this point, but I do still think it would be really nice to have people that are unemployed have more help. Small businesses that are still struggling have help. And that would really, I think, improve the rate of recovery in some of the beat up sectors like retail and travel and financials. And so I still am hoping that happens. If it doesn't happen, that will be a headwind to the recovery, I think, somewhat. I do think we'll get something hopefully by the end of the year, but not something necessarily we should bet on or count on given the state of politics.
Yeah, it's sounding like it's going to be a next year thing, but
well, either way, the markets don't seem to care right now because I think the theme is pop stop runs and short squeezes.
Yep.
And we actually got a question from one of our community members. Eros was asking, Chris, can you share a few thoughts on what a pop stop run is? I understand the concept and why they occur with the price moving a lot in a short period of time, like seconds or minutes. Do they also apply over hours or days of time? So what a pop stop run is, for anybody that doesn't know, is basically the initial reaction and price that you get when a short squeeze occurs.
Like GME.
Yeah, like GME. Perfect case in point here. So for anybody that doesn't know, a short squeeze is, Nikki, why don't you define that for us?
A short squeeze is when you have a lot of people betting against a stock, so they borrow shares of the stock to short.
Yes.
And then what happens is if the stock starts to run against them and goes higher, obviously they want it to go lower. If it goes higher, then traders have to buy to cover their shorts that they sold short. Yeah. So it's like basically it's putting a lot of buying pressure on the stock because of all the shorts that are piled in. Well, now they're like, oh shit, I don't want to be in the stock anymore. So they're buying.
It's kind of like the inverse. If everybody's long something, if everybody's buying and there's nobody else left to buy, once somebody starts selling, that creates a waterfall of selling. It's like the inverse of that. When you have a lot of people betting against a stock or a crypto or whatever, as soon as that buying waterfall happens, it creates something like we saw here on GME where it went from 5 to 15 in just a few weeks. Right?
Yeah, and in regards to the question of pop, stop, run, I think what happened in GME the other day, I forgot the exact day, but that big green candlestick you pulled up, I would say that, I would say that was probably a pop, stop, run. A lot of stops got hit on, and a lot of people just had to start covering.
Yeah. Yeah, so there's two things that happen. There's that initial pop stop run. So what happens is buying begets more buying begets more buying. So let's say once you break through a resistance area, like we've had this happen on Bitcoin quite a bit.
And stop refers to stop loss.
Stop loss orders, yeah. So basically what happens is, like, say through here, for those watching on the video, if Bitcoin has resistance at $10,000, and then you start to see, let me kind of zoom in here, you start to see price move through that 10K, what you're going to have is a lot of people that are short, they'll have buy stop orders behind this price saying, okay, well, if price isn't going to go down, I'm going to lose money, so I need to buy those back. And what that does, it when people start covering their shorts, that also attracts breakout buyers. Yep. So people opening fresh long positions. And anybody that was thinking about selling pulls their limit orders off of the order book. So anybody that was going to be a short seller or was going to take profit from along, they pull that. And so the ask side or the sell side of the order book becomes more thin. Buyer, it's like kind of a momentum. It's like once that snowball gets rolling downhill, until it flattens out, like it's just going to keep steamrolling. And that's why in Bitcoin specifically, and actually a lot of cryptos, once you start to break through strong resistance areas, typically you get that fast initial push.
We're seeing a lot of people hunting short squeezes now in the market. So in stocks, at least, we've seen stocks like GME. There was Dillard's yesterday or late last week.
What's the ticker?
DDS. This is a department store chain that really has not reinvested that heavily in improving its business. And I would imagine that, they're going to be struggling for many years to come, similar to like JCPenney or Sears. But the float is very small here. The family owns a lot of the company, and so the actual publicly traded shares available are pretty small, and it's heavily shorted. So when you get, some spikes in price on the stock, you've seen actually in the past, over the past couple of years, a few times where this stock was up 30 to 50% in a matter of a week or two due to short squeezes. And we had a big one this week. There was just a small announcement that one of the Berkshire investment managers bought a little bit of Dillard stock, and that small piece of good news was enough to send the stock up 30-40% in the day.
Wow.
And so same thing with GME, same thing with Dillard's. I believe we're seeing it with stocks like GoPro, GPRO, and now people are starting to hunt and look for what is the next short squeeze in the market.
Hopefully Abercrombie and Fitch.
We have a couple, actually. We have a couple stocks that we think are phenomenal. The best thing for a long investor like us is like you find a company that you think is undervalued, that you think has a good future potential, and it's heavily shorted, meaning like when things start working for you, then you get this like double,
that's
double
my
benefit.
Jam right there.
Shorts buying alongside.
My
so
specialty.
Yeah, it's great to
so
have
when you
that
have the
buying
fundamental piece, and then on the technical chart, and then kind of what crypto people would say on-chain stuff is like, what's happening behind the scenes with the supply of the I almost said coins, shares, right? It's like, oh, everybody's short, everybody's negative. Oh, they have to cover, and we're at resistance, and there's good news, and there's a technical breakout.
Oh, yes.
And fundamentally, the stock is strong.
Woo.
Yep.
Love
yes.
it.
Nice.
I do.
Gains in a hurry. We love it. We love it.
Sweet. Okay, cool. So I guess to wrap up this question, so the idea is initially you get a pop stop run, which can lead to a waterfall of buying that actually triggers a new trend. So that's actually what happened with Ethereum over the past few weeks. We'll jump right back here. And it's kind of like, once you get a breakthrough of that first resistance level that's been holding for several years or longer, that can actually be the start of a trend, right? Obviously, anything can happen. It can top out after the first pop. But that's what I look for is after you get a pop stop run and that initial short squeeze, is that going to kind of create a catalyst for a multi-week or a multi-month move? That's what I look for personally.
Yeah.
Sweet. Okay, so next question is Mark. Why are leveraged ETFs such as the TQQQ given such a bad name for long-term investors? I get that it has volatility drift and drawdowns of 80% or more, but on the upside, it has more positive drift. Doesn't it fit the small, high-risk portion of a portfolio? If you buy the fucking dip, you'd have some more insane gains. Trav? What do you think, brother?
No, I mean, the history of levered ETFs is just littered with, zombie ETFs that have gone away or had to do like reverse splits to get the price back up because they just leak value over time. They are absolutely not good as a longer term or even a medium term hold. If you're trading leveraged ETFs for like a very short term time frame, like 1 to 5 days, fine. And that can be, that can work really well. Mm-hmm. But one, your timing has to be on point, and two, you got to make sure you don't get, you don't become a bag holder in these things because again, they will bleed value over time. Like if it's amazing, look at the like S&P 500, right? It has an upward bias over time, and you would think that then the 2x and the 3x levered ETFs behind the S&P 500 that are S&P 500 with 2x or 3x leverage would actually look a lot better on the chart. They actually do worse over time and bleed value because when the S&P 500 does dip, those levered ETFs get crushed. Mm-hmm. They lose value when they rebalance in those corrections, because they're daily rebalancing or weekly rebalancing, they lock in their losses when those dips happen, and then they fail to recover the same level that the S&P recovers over time. So
it has to go that much further.
Yeah, we've said before, like if you lose 50%, you got to gain 100% just to get back to break even. And so the asymmetry of losses that get locked in on these levered ETFs on a longer term basis mean that they'll never actually have the same performance as the underlying asset, even though they're using leverage. So that is something, and again, we could pull up a chart. I've pulled up charts before on things like TradingView or Koyfin, where just chart the S&P 500 and then chart the 2x and 3x levered ETFs over a long enough time frame, 1 year, 5 years, 10 years. The levered ETFs don't keep pace with the actual underlying asset, despite the fact that they have higher leverage.
So what would you say is, I guess, maybe the most ideal time frame if you are going to trade these or quote unquote invest in them? What is kind of the sweet spot for how long you might want to hold them if you are going to trade these?
I mean, less than 2 weeks, really, because they can very handily outperform the underlying asset for a couple days or a couple weeks. But if you have any volatility in the underlying asset, then over time they're gonna lose value. And especially the ones, if you actually look at the bear ETFs, levered ETFs against S&P, those are even worse. Those are all down 95, 99% over 5-year
it's like
time
a
frames.
huge just downward trend.
Yeah, because the S&P 500, like I said, has the upward trajectory over time. So you're just constantly getting beat up with the levered bear ETFs. It's volatility hurts these things permanently. So in a short run, like let's say you take the 3x leverage ETF product over a couple days, you could be up 10% with the underlying asset only up 2 or 3%. But on a 5-year time frame or on a 1-year time frame, even, you're probably going to be doing worse than the actual underlying asset.
So maybe if you're trying to get a little extra juice on a breakout or a swing trade, maybe there you go. But
you have to be really good at timing. If you're going to hold it for, a week or two, you have to be really good at timing when that correction or pop that leg is going to happen, basically.
So what's a better alternative then for a longer term?
The index.
Low fee index funds?
If you want some leverage, you could look at like really deep in the money options. Now, options are kind of similar to the levered ETF products in that they're higher risk, higher reward. So you do risk losing a significant amount of your options bet in a lot of cases. But if you do the deep in the monies, you're going to have less time value premium built into those. And so you can actually get a little bit of extra leverage on top of the underlying index, but you're going to obviously be probably risking a little bit more of the principal there.
Yeah. And also on future side too, like you could do the E-minis or the micro E-minis to
That's right.
Yeah.
get some of that leverage
keep
too.
Rolling the contract.
Yeah. And that's why I don't really know many people that hold E-mini contracts for a super long time period.
Yeah,
but they're also
is that not common for people to do that?
well for hedging and things like that, but and also on the shorter time, like the shorter the time frame, like we're talking like day trading now, it's all of the edge there has been arbitraged out by high frequency algorithms, right? Like day traders used to be able to go in, and then on the longer term time, like it really doesn't make sense either with rollover cost.
Yeah, you do get and it depends on the product. Like certain types of commodities can have really significant roll cost, whereas like an S&P 500 index future has maybe a couple % a year of roll penalty. And that's, where you're constantly having to roll into the next contract, either long or short. And typically it's at a slight premium. Sometimes it's actually at a discount depending on what the market is doing. But generally on average, you're going to pay a roll premium over time. And so that will cost you a couple percentage points a year of performance. But it does have leverage embedded in it, potentially, if you want to utilize leverage on some of the futures products. So you can actually achieve something similar, but it is just slightly different product with some different puts and takes there. So
basically the lowest cost option for longer term is an low fee index fund. When you add this element of leverage, that kind of complicates things, and you have to just think about things like rollovers and time decay and cost. And
that's right.
You could buy an index fund with a margin account.
Yep. That's another way to do it.
So that's something he could do.
Yeah.
Interesting.
Yeah. So utilizing leverage with a margin account, either through the underlying index or the futures, or doing some sort of option strategy where you maybe look at the leaps, or you do some kind of like bull call spread or something like that. That can be a way to do it. I actually think those are probably all preferable in a lot of cases on a longer term time frame than leveraged ETFs.
Sounds like we could do like a multi-hour class just on this.
Well, actually, it's funny you mentioned that, because in my stock boot camp that we did over the summer, the 10-week boot camp, there was a couple of days we spent on those types of hedges and products for shorting and hedging and using leverage.
Nice. All right. Next question. Beloved Punk asks, occasionally I come across logarithmic readings of Bitcoin. So basically, I'm going to simplify this question. Chris, I'm curious what your thoughts are on log charts and how you feel that they might be anticipating like the next stages of the bull cycle. Do you think that log charts actually hold any value? So I think we've actually talked about this in the past, just to give kind of a quick overview of and difference. So you have kind of a regular chart, which is, it gives equal distance between price ranges. And then logarithmic is basically a way to measure exponential growth over time. So if we just go back and look at like a Bitstamp Bitcoin chart that goes back, we'll do weekly, you can really see the exponential gain here. And whenever we start to use things like the stock to flow ratio and different mental models for quantifying exponential growth, I think log charts do add some value there. But if you want to get a true representation of price movement, a regular chart is the way to go. Excuse me. The only way that I really look at a log chart is by coming up with multi-year kind of price ranges if those exponential models play out. But there's no guarantee to that, right? It's just a different way of viewing price, but you have to understand that it is skewed to the upside. Do you guys use log charts at all, or?
Nope.
I don't tend to use them, but I'm not much of I'm a beginner when it comes to charting and technicals.
Yeah. I think really, I don't know of any stocks other than like Apple and Google and stuff that maybe these could even be relevant for, because really what you're looking for is percent upside and percent downside, right? Mm-hmm. And when you're looking at a log chart, it makes it deceiving, and it doesn't give a true representation. But when you're using a specific type of model to come up with a forecast, I think there is some value there. But again, I wouldn't put like all your weight and focus there.
Mm-hmm. Makes sense.
Yeah. All right. Lucas was asking, what is your opinion on factor-based stock market investing, like AKA smart beta? It captures beta and long-term systematic mispricements of active investors. Shouldn't a majority of people focus on this approach instead of super competitive options like, seeking for alpha? What do you think, Trav?
Yeah, I think factor-based investing has become really in vogue in the last probably 10 years or so, especially among institutional investors have actually gotten a lot more involved in factor-based investing. Factor-based investing is basically just a style of quantitative investing. Factors are a way to group certain stocks based on things that are quantifiable, like a value factor might be, or a value bucket of stocks might be, stocks that trade under 20 times PE or something like that. Obviously, it gets a lot more complicated than that, but you have momentum factors, which might be grouping stocks into a momentum factor based on how well they've done relative to 50-day, 200-day moving averages. So you would invest in the ones that have momentum and not invest or short the ones that don't have momentum, and that would be a way to actually try to capture the momentum factor. So quants do this. There are even now ETFs that try to capture specific factors. And so if you invest in that ETF, you're getting exposure to one specific factor. And it can be a very interesting way to invest. We have some historical data backtesting that shows certain factors do tend to produce good returns over time. Like momentum is one of the stronger factors over time. You don't know if that continues going forward over the next decade or the next 5 years. So that's always the risk, is you can have good factor-based strategies that just stop working. Mm-hmm. So, I think factor-based stock investing is interesting if you have access to the right quantitative managers that are constantly evaluating their strategies and improving them and finding different ways to tweak them and get returns over time. I'm not sure if like it's necessarily like the end all be all for everyone, because factors eventually get arbitraged away over time. As quants figure this out, as people figure this out, you know, and everybody starts to invest in specific factors, then the returns or the alpha from those factors get competed away. So again, I think if you have access to a good quant manager that is constantly evolving, that can make sense. And it can be a great place to invest. You just have to really look at the specific product that is offering you this factor investing and make a decision.
Makes sense. Awesome.
Well said.
Well said, brother. Well, guys, I think we can go ahead and start to wrap it up there. Wanted to ask you both, what is a stock or something that you're excited about that you think could pop off in the next like couple of weeks?
Oh, good question.
Ooh, you go first.
Yeah, I mentioned a few stocks over the last couple of weeks on our podcast and on my specific channel that I think are interesting from a couple of different vantage points. SBE, the ChargePoint SPAC, the SPAC that's acquiring ChargePoint, which is the largest EV charging infrastructure company in the U.S. right now, should have really a decade or more of long-term growth, assuming we get this transition to electric vehicles, which I do think we'll get, and we'll probably even have significant infrastructure investment to help the EV transition if we do get a Democratic administration here in the U.S. So that's a company that could benefit and just be a pure play bet on the growth of electric vehicles over the next decade.
Yep.
The market cap's still relatively small, although not a ton of revenue yet, about $200 million of annual revenue. But
it's SBE, right?
Yeah, SBE. Potential to grow massively over the next decade.
Yeah, this thing's popped off as soon as, I think we talked about this last week when they made the announcement. Basically went from the $10 up to what, 15 or 16.
Yeah. And so it's still, I think, relatively under the radar for a lot of people. But it's funny, I was at one of the malls last night doing store checks for some of our retail
I love
investments.
that we do that.
You guys are nerds.
Yeah. But the ChargePoint chargers were actually being, or were the ones that were used there at this Class A outdoor mall that I went to. So that was cool to see. And I think there's, you know, those could be potentially at every gas station across the country eventually if we get enough EV penetration. So lots of room for growth there. Could be a volatile one, but definitely one I think is under the radar as a potential growth stock over the next however many years.
Nice.
Yeah.
Well, we'll keep this one on watch then.
Yeah.
Yeah.
Nick, what about you?
So I'm pretty bullish on Ulta, which is
Is that the makeup brand?
it's basically a beauty retailer.
Okay.
And they've really, as far as like, they have that combination of the technicals on the chart and the fundamentals. Mm-hmm. The technicals, is that a weekly or a monthly?
This is a monthly, going all the way back to 08.
If you look at a daily chart, it's actually looking pretty interesting on a daily chart. But I think that this is going to be a beneficiary of any type of stimulus package that comes out.
Because the ladies are going to go buy their makeup.
A beneficiary of just us getting back to our normal lives and traveling more and going out more eventually, whenever that happens. So I'm pretty bullish on them, and they still have room to expand internationally as well.
Sweet.
Coronavirus kind of messed that up for them, but it was on their, it was on the docket for them. So I like that, and I'm pretty bullish on Abercrombie right now, but everyone would probably tell me I'm crazy, but I am.
Hey, that's how you find the big movers, is everybody thinks you're crazy and then you're right.
Yeah, and that's one of those that could short squeeze to very hated retailer for many years. But yeah, that's what I got.
Interesting turnaround play there. And I think if you believe that, you know, brick and mortar retail is going to come back and recover to levels at least close to what we saw in 2019, that there are some incredible values in retail, and we've got a couple in our portfolio. We talked about a few here on this show and on our channels, but I think there's some pretty unbelievable values if that is your view. That,
and you know, it's kind of been that way for years. Retail having value if you look deep enough for it, and that's kind of how I found things like Target and Walmart and Lulu, and people weren't looking at it because it's retail, and the retail was dying. You know, so I kind of focus on just trying to find what people are hating on that actually could survive, and that's what I'm thinking with Ulta. And
it's kind of the, like you talk about, the Peter Lynch one up on Wall Street type of idea of like what's actually happening in the real world. Where can you see trends developing? And that's how, Nikki, like you found like Lulu and Square and some of those early ones. And that's what I love about investing is like, it's this constant like chase of like what's coming, right? I was talking with Carter Thomas the other day about this. Like he's constantly thinking and looking, and it's, no matter if you're like dirt poor or extremely rich, like if you love that game, like you can make investing either a career or just a hobby that you make really profitable. And it's really fun.
Yeah, we love this stuff.
Yeah. What about you guys? What do you see out there? What projects are you interested in? Give us some tips.
Projects,
leave a comment if you're on YouTube. Like what crypto projects, what stocks, what are you guys looking at? Also go to wetalkmoney.com, submit a question for the show. What else, guys? Join our community if you want to invest alongside us. And
Yeah.
Thanks.
See all our trades in real time.
Yeah. Awesome. All right. Well, hey guys, thanks for listening or watching. Also subscribe to the podcast, leave us a review. If you like this and you want to see more shows, let us know what topics you want to see covered. So
Thanks, guys.
awesome. Take care. See ya.